Hey, what's up? I mean to lean in on it like that. So earlier, check this off. I'm not like a very vain person where I have to hear myself talk. There are no people out there like that. But earlier today, I came back and I looked at this market again. I looked at Bitcoin. So this is Bitcoin USD, and one of the things that I was sharing is that anybody that would have like a perspective or you're just trying to get an idea of institutional order flow, if you're looking like not for the people that just absolutely have to have something to do, but you're looking for a reasoning as to why, right? Or how you could become a participant, right? And I basically, just shared essentially treat every day like when it comes to crypto, you just treat every day like you do futures and things with price action. And one of the things that I said is, hey, look, this is a framework by which you could look if one side, like in this case, the pre 830 buy side sell side were marked out. The sell side was basically souped or liquidity taken, and there was an opportunity if you treat it like a candle range that you could just wait for that closure inside. Just again reevaluate the structure, see if there's any type of a potential retracement before a continuation to take out the opposing side's liquidity, right? So I said that ideally, just within the right context, not by itself, but within the right context, that could be the framework under which maybe you look at a position. It also gives you a very short term positional bias for where price is drawing to or where price is going, right? The other aspect of that I utilize is like again within the context of what we're looking at right here, and we're on a 15 minute. So I was actually talking about like all the way down to the five, right? So you look at this from the 5 minute, you say, okay, well, let's look at the 4 hour time frame where you're just trying to see what is it drawing to. Well, that pre 830 buy side liquidity is a candle range high for the 7 a.m. candle. This is the 7 a.m. candle range low on that 4 hour. You can read. I'm at, and let me just slide this over. I realize my head might be in a way. So yeah, you can see that, right? So I didn't mark this as a high because it's the same level. I just didn't want it to be, you know, confused with what's already there. But I dropped down to a 15, and what I was explaining earlier was that you can be predisposed to price doing a specific thing, right? And this goes towards the the anticipation or what you would expect. And again, this is it's a very thin line between what the market is going to give you and what your expectation is. And I'm a firm advocate now as to making it like crystal clear. You can't have an expectation when it comes to the market is what I mean. Now you can anticipate certain things, but your expectation doesn't matter because you're not the composite operator. You're not the I don't even like using the expression market maker anymore. But you are not the driving force behind why price is going and doing what it's doing and such so forth, right? So what you can do is you can allow like the guardrails or certain rules within your plan to apply as to whether or not you think it's favorable or it's best just to stay out. So one of the things that I laid out was okay, if we use the framework from the 830 buy side and sell side, we see one side run out, we've seen the other side cleared out. Now what are we looking at? Well, we've taken this very small, concise time frame, or this small sample rather, so not even a time frame, this small sample of price between the two 830 extremes. That is basically translated into a 930 open per se, just for Bitcoin. I know it's Sunday, but just stay with me. You've you've been able to endure. You sit through the 9:30. You sit through the rest of the AM session. You sit through the lunch period, and then once lunch, as we can see here, didn't run on the AM liquidity. It's doing it now in what considerably would be called the New York PM session, because it's 2:43 right now. So an interesting thing is going to happen in about another 17 minutes. And that interesting thing is going to be that the next 4 hour candle is going to close. Where it closes could be indicative of if you want to frame a trade from this 15-minute time frame or not, based on the 4 hour structure. So what do I mean? Here is the buy side liquidity, or the 4 hour candle range high from that 7 a.m. candle. Here is the low. So what I was suggesting in the earlier video, that's actually up on my YouTube channel, because like I said, it was just something that I just kind of wanted to share. As I was thinking about it, I figured, what the hell? Let me just go ahead and put it out and put it up. But what we're looking at, and one of the things that I said was, once price closes out of here and it's running away, there's really nothing for you to do, right? There's no position to take. There's not a reason to chase it, because that's where it's going. Like, there's nothing to do. You can wait for a period of time under which, within this area, and I still have this up. Wow, that's crazy. I thought I took that off. That once price gets back into here, you could potentially look, and I'm going to get rid of that because that shouldn't really be there. I did that to mark out the zone. Yeah, there's nothing to do. So this is going to be one of those cases where it looks like price may very well just run to the opposing side and take out this 4 hour candle range low. Because yes, you did get a closure back inside here. Can you take this? I guess you could. This may be, and while I'm doing this, I mean, I guess this will be kind of interesting to see if this does take the sell side or the candle range low, because this will happen sometimes, right? Now, we are again on a 15 minute, so the 15-minute candle is going to have some bit of strength. Yeah, this is going to just take the bottom. It's going to take the low. Let's drop down to a 5-minute here real quick. Okay, so yeah, this is likely to just take it. Now there could be a level, I guess you could say, like a level of pushback, if you will, where the market will retrace, because you do have this volume imbalance here, but that can be quickly rectified if this down close candle closes back up, or if the next 5-minute candle that prints, got another 4 minutes for that though. It's not inconceivable that this candle closes back up inside. So yes, while we do have a volume imbalance now, that could be eradicated, especially if this is a strong enough rejection to where it will fill here. That is small. So I would be looking at something like this. I would do that. And it would just be something that I would be mindful of. Understanding that, yeah, this candle has not closed, so should I be doing that right now? Yeah, probably not. But what I'm also doing is I'm aware of the volume imbalance here. Now, a couple of different things, and this kind of goes back to the previous point a minute ago. What do you do in a situation like this? Does FOMO kick in? Because it could. We watched price blow through that high earlier, and then we've seen it, just within a session or 2 sessions actually, where it's essentially, reached the point in price where it now is going to do some accumulation, and now it is distributing, as we can see. But is that distribution complete? Well, probably not. But there is, again, the prospect and the possibility, like I said, that it completes, and then it can pop back up into this range at some point. As it stands right now, just based on what price is doing, we already know that it's going to come back up, and you're going to get at whatever point in the future, um, you're going to get a some level of a portion of a balanced price range in here because of this volume imbalance, just as you'll get it here. So it's the second time today that that's happened. I really don't know what in the hell that's about. Like, I have no idea what's causing that, where stuff just kind of goes out and comes back on. But um, yeah, that wick is pretty telling. That maybe not just yet. So this wick is traded back into um, this fair value of this opening range gap. So let me show you what I'm talking about. And I'm not gonna get into the whole naysayers and whatnot. I'm just gonna say what I always say. People could look at and believe whatever they want to believe in terms of why price does certain things. I am not going to be the person that's going to tell you that you're wrong or how you believe or how you trade or what you do. Like, it's really, it's none of my damn business. It really is. Um, I just kind of want to share what I can see, what I think will help, not necessarily what you could be doing instead of. It's just everything I feel like is a building block for all of us. There's something that we can take from everybody. Before I ran into or ran across, um, I think the creator, I think it's Lowe's Trades, LOZ Trade, and literally I was just looking for something to watch on YouTube. I was bored. I got bored one day, and it said something about one candle, so like just trading one candle. So I was just like, let me take a look. Now I do that because I'm a firm enough believer in understanding that I can read price and I know what's going on, to where it's not me looking for another shiny something. It's just me looking at a different perspective. That's legitimately like all I'm doing is I'm looking at a different perspective, and that kind of led me down the path of, he's essentially talking about candle range. He's also talking about, a power of three concept, and it all kind of interrelates. So all I did was I just essentially said, okay, well, what does this mean? Did a little bit of a deeper digging and then looked at that in relationship to what I was already doing. So say all of that to say this: everybody that creates content or that talks about maybe a specific concept and they use different terminology, not everybody is out to rebrand or remake something. Sometimes people rename things because it's easier for them to understand what the hell they're looking at and what's occurring. Um, I would be one of those people. I'm not trying to take, rebrand, or sell somebody on something that I just put in the framework and the context in my trading plan that makes it easier for me to see and understand what's going on. So, as a quick public service announcement, sidebar, side note, I would encourage everybody essentially just to kind of do the same thing. Like, once you get the general concept of what it is that you're looking to be a part of, or you're waiting for something to occur or happen before you're able to, scale into a position, take a position, set what your risk management is, whatever it is. If you have to make it your own, you should, because everybody's system should be their own. Um, you can take the general concepts, but if something resonates with you, with your style of trading, with your personality, that's what it's about. There's no sense in doing something as restrictive as taking an idea and a concept, implementing it that way, and even if it's uncomfortable, and let me stress by saying, if it's uncomfortable and it's profitable, it's probably not something that you're going to endure for the long term. It's something that you're going to tolerate long enough to get, I guess, what you need to, and then at some point you're going to be trying to change that to conform and fit your personality and your overall trading demeanor. Not a win-win, and it's not like a successful formula long term. Again, it could be successful for you in the interim because you're uncomfortable doing it. So, what I would always suggest, and I strongly suggest, is if you find something that resonates with you, it doesn't matter if it's one concept or if it's several, look at what those things are, and try to match or manage whatever that concept expectation is, which could be profitable, which provides some level of edge. See what you're able to either change the names or refocus to make it easier and more manageable for you to be able to accomplish long term, because that's I think that's a big portion of what trading and what a lot of this space is, that kind of gets lost lost in the sauce, if you will. When people say things like psychology is a huge part of it, it realistically it is, because we can all kind of just sit back and look at things all day long. I mean, we can somebody could look at this price action and walk up and hear me talking about not what's going on here, and they're gonna, with any reasonable amount of time being spent, and even though I have like the sessions and the time frames kind of laid out here, they're still gonna be able to look and see certain things, right? And as we spend more time, I could literally say, this is fair value down here, right? Somebody else is going to say, well, that's a fair value gap. Somebody else is going to look and say, well, that looks like, oh, well, wait, down close. This last down close, that's an order block. Everybody's going to see something different that's going to allow them to negotiate what it is that is occurring at that level. However, I would dare to say that maybe two-thirds or three-quarters or whatever the number is are going to understand and agree that, hey, this is probably going to cause some kind of reaction interterm here. It's on a 5 minute, so it's fractal. There's going to be some kind of reaction down here. So I just marked out fair value. That's all I did. Somebody would look at this and say, oh, that's invalid. If there's a fair value gap, it's invalid. It went through. Well, not really, because fair value gap is three candles. One, two, three. So we didn't exceed this candle low. So it's not invalid as of yet. Now, in order for us to meet the potential target down here, it may have to inverse, for whatever that period of time is, because we're trying to get down here, right? So we'll see. So 5 minute, I said that on the 15, there's a volume imbalance here, so we'll see what occurs here, because we've trying to be worked out a little bit, but not so much. So that's paired there, but we'll see what happens. Because as I said, it can clear through the 4 hour low and come back in and just try to basically pair price in this area, because it is still obviously, um, it is deficient, even though you have this move back in. This could be enough to propel it, but we'll see. Now, to someone else that might be looking at this thinking, well, yeah, he just said that might be. Somebody else may have, I'm not saying, but somebody else may have said, hey, yeah, when I see this, they may have just said, hey, look, let's see if that delivers. They may have done something like that. Now, it's not quite a 2 to 1, it's a 1.81 to 1, but that could be something that someone would do. The idea is, again, once it closes inside, you know, um, that could be your confirmation. We're dead smack in the middle of this 4 hour candle range, and again, it's what is the expectation? The expectation is it's gonna deliver here. That's the expectation. Is it gonna do that right away? Don't know. But one confirmation is you got to close your inside. You have a quote unquote gap down or volume imbalance that exists in here. You could repaint. It could actually come back out of the zone here to accumulate, you know, more orders. You still have some some buy stops up here or some buy side liquidity that rests above this. So is it improbable that it comes back out in shorts? No. You got fair value and a volume imbalance up here, but this may very well be existent for another reason, which might not be today. Kind of like this area of fair value between 9:50 and 10 a.m. wasn't really of any use. Once we had the suit back here, this was essentially going to be looked upon in some nature of price action as a breakaway gap, because price never came back into this until now at 245. So everything serves a purpose. Everything has a reason. Um, Sometimes you just have to mark some things out. I need to just move this over so my head's not in the way. But I can't remember how many months ago or so it was, and I'm not gonna make it seem like I've been doing this for forever, because I haven't. Like in terms of marking fair value and things like that, like I just got to the point where um, I was comfortable enough with what I was doing that I just kept looking at price, just trying to understand, and it's a consistent and a constant. Um, it's a constant learn, right? And no matter how much you know, there's always so much more that if you open yourself up to learn, you can. And I think some will get the learning confused with that means that every time I learn something new, I have to incorporate it into my trading plan. You really you don't. What you're doing is you're just maximizing the amount of information that you have, which allows you to separate out from whatever your edge or whatever your trading plan is. But now you're just looking at um, data points, if you that will avail what price does under certain situations. Um, if again, if it's framed around the way structure forms prior to a 9:30 open or 8:30 open, okay, what happens, what day of the week is it? There are people out there that do that kind of thing. They're looking at what day of the week is it, what time is it, what occurred yesterday, is there economic news today, is there economic news, maybe not for the United States, is it for Canada? What is it, and what impact would that have, or what kind of fundamental bias could that impose on this technical market, since the U.S. doesn't have any economic data? So there's certain, like I said, there's certain data points that will allow you to just kind of look at price and go, huh, I wonder why that was left. So for me, several months ago, it was looking at price and how understanding that not in every case you will have maybe bullish or bearish price action from liquidity that's been sought or taken prior to a 9:30 open. Watched price run on that assumed and accumulated liquidity to a certain extent, and then begin to run on the accumulated liquidity from the AM session in the afternoon. Meaning, if it was bullish in the morning, it could potentially be bearish short term, because now it's running on the engineered liquidity. Well, while I was looking at that, the other thing I was noticing is that at different aspects and different times and different places is something that I'll probably never speak of, because it's something that I have documented, and I'm still kind of sort of trying to get the rhyme or the reason behind why. I have noticed some nuance behind. So maybe at some point I might, but I'm not going to be too detailed and specific about it. Um, and no, it's not going to be something that's going to come out behind a paywall where I'm going to tell other people. I'm just like, that's one of the things, like I said, I'll share bits and pieces as I kind of continue to develop the scope of what it potentially is. But to get back to the point, while I'm looking at how liquidity is being run on and how it's being utilized for an expansion or what have you, I started noticing things like, hey, we had a fair value gap here that's just left open, and I wonder what that's for. Because again, there's some people that would say price is random. A lot of people would say price is random. Um, I've not directly participated in the conversations about algorithmic price delivery. There are a lot of people that use the algorithmic aspect of price, and they make it like a joke as they're looking for certain things. But um, I'll just ask and it's rhetorical, obviously, in this sense, because nobody is in place right now to be able to answer. But I'll probably more than likely upload this to YouTube at some point, and I would encourage any and everybody that are watching, which I appreciate, and listening to what I'm saying and comprehend and understand what I'm saying. If once I make this suggestion and I ask this question and then I give you my reasoning behind it, I literally and I honestly would appreciate any comments that come on the heels of this. So to go back for the individuals or the people that would say that price is random, like that markets are random, and they scoff at the idea of any kind of algorithmic delivery, any kind of an expected or structured moves or what have you. Like those that are just like vehemently opposed to the concept of that even being prospect, like that's even an idea or a thought, right? I, I would just ask this question, right? I'll ask it and then I'm going to answer just based on my thought process, right? So here's the question. If indeed the market as we know it, and this would apply for the Dow Jones, it would apply for the S&P, it would apply for currencies, it would apply for cable or fiber, it would apply for your exotic currency pairs, futures, commodities. It doesn't matter. It would apply to all markets. Okay. So again, if price is random and the thought is somewhere between, and the number's probably grown, but we'll just kind of we'll ballpark it. I'm not going to cap it, but we're going to ballpark it, and we're going to say that about $9 trillion flow through these completely randomized financial markets. Here's the question: how many big money players, okay, how many extremely wealthy individuals do you think or do you know that would, in essence, pay into a position or put money on the table for shares or stocks if they didn't have some level of, let's just say, in the case of maybe like a dividend, like they didn't have an idea, okay? An idea of what the dividend would yield, or a prospectus, which again, fundamental. In nature, it's fundamental. Okay. In delivery, it's going to be technical and it's going to be, driven by a numerous number of factors, right? But who the hell is going to put their money into something that they don't know whether or not they're going to be able to get it out or not? Or if it's going to mature to where they can receive a dividend, they can receive payment, or they can cash out at a higher or lower price, which they're going to be able to profit from. I think it's a legitimate question. And again, my argument, my answer to that is I don't know anybody that's really going to hedge a significant amount of money on an idea that may never come to pass, especially when it comes to the ability to benefit financially. Now, I'm not talking about people like me per se. I'm talking about when you get down to like your Warren Buffetts of the world, and he might be one person that is somewhat of a polarizing figure in our lifetime, and again, he may not be the best example because there were products, stocks, and whatnot that he purchased as a younger man and he just held on to, right? So somebody would argue and say, well, what you're saying, he did, like he didn't know all those years ago. Well, and now all of a sudden, all of these data points and pundits, financial pundits, are now saying, hey, you know what? Just because a market goes down, don't freak out. It's demonstrated and shown since the inception that it goes up. Over, I can't remember what the percentage is, but essentially the market inherently, like the Dow and the S&P, inherently always go up. They've always gone up since inception. Yes, there have been some down times. Yes, there have been uh, depressed times or recession like events, um, catastrophic events that have forced sell offs. However, the market has always seemed to rebound and make new highs in light of certain economic uncertainty and previous downtime. So it's always kind of rallied and rebounded. So the argument could be something to that extent. He bought something a long time ago and said, "Hey, it's going to mature at some point. I'll hold on to it. It's worth at that point whatever it is, maybe little or nothing or not as much. And hey, got time to see what happens. If it pans out, great. If it doesn't, well, I'm holding it and maybe I can cash that out and roll those funds into something else. Depends. Um, I don't think that they bet that way. And again, it's just my personal opinion. I don't see where big money is gonna hedge on a bet. I just don't see it. It's kind of like Vegas. It's like a casino. A casino is operating from an edge. A casino knows that, yeah, there are going to be some people that are going to come in here and they're going to win. However, the house is going to win more than we pay out. It's that kind of philosophy for me. So to go back to the original point about the randomness or the algorithmic nature of price delivery in the markets, I think that there is some degree of, um, as I like to refer to it, manual intervention. I think that is those are the outliers when it's news, when it's something going on in the world where you can institute a fundamental or a sentimental whatever uh, into something that is being algorithmically delivered. You can pause an algorithm. You can stop it for an indefinite amount of time. You can probably code and change like so. I look at those things and I say, okay, well, I would think that that's a little bit more plausible. The randomness in the market is during those manual intervention situations. That's just my thought and my belief. Um, and again, that's hedged on the fact that when something like this happens in a market where you left with fair value, it's kind of like the whole scale all the way out and put a horizontal ray on your chart and then scale back in and go to a lower time frame. And somebody will say, I guarantee you're going to come across some piece of price action which price is going to have wicked through that horizontal ray no matter where you put it. And is that true? Yes, that's going to be true. It is. It's not disproving it's not disproving the fact that a market is algorithmic. That's not a disproving factor. All that simply says is that price at some point is going to exceed whatever that level was. No different than if I came up here and I decided I'm going to put a horizontal ray on this high. At some point, we don't know when, price is going to run through that. I mean, it is an inevitable assumption that will occur. Why? Because we have whatever number of years you want to put on it, 40, 50 years worth of data that says that usually when there's a high and we have some level of retracement or we have some level of sell off, what can sometimes happen, there's a buying frenzy at lower prices, that does what? Tends to inflate the overall price of whatever the asset is, where it can exceed a previous high. So there's a level of expectation that goes into it. So all that just to simply say, I don't think that they're random. I think that they are, as price gets pointed out in varying degrees, there are price points or there are price levels where somebody would say, well, I'm looking for a price to get to here. I'm looking for a price to exceed this limit, this level, this price activity, and then this would be where I would be looking to buy or sell, etc., etc. These areas, when they show up, and again, you don't know when and how, but as we're looking at this, and this is just above my head, when I was talking to you about the potential of price coming in and filling in up here after it's gone and done what it needs to do. Well, I want you to look right back here. You see that here? It's just above, yeah, slightly above my head here. What is that? That's a volume imbalance. What's happened back over here? You got some back and forth in here, specifically in this area, while price is essentially running to this candle range low. But for what reason? There's a volume imbalance. So what are you doing? You're trying to pair price in this area to fill that gap. You got a volume imbalance here. Well, you've got what? One-sided delivery. But what do you have here? Bullish, bullish, bearish, bullish, bearish, bullish, bullish, bullish. And then you get, so I know somebody out there will be counting these and say, well, there's more bullish than bearish. That's not the point. You're still going to get in a solid up close candle. You're still going to have sellers in this candle, right? You're still going to have some selling in that candle. Overall, it's going to be bullish. So obviously more bullish than bearish. Did we have buyers in this one? Yeah. How do you know? Well, there's a wick there. That's also going to be the manipulation. However, that's what that is. Did you have buyers and sellers here? You did. And it was overall bullish. You still had more buyers than sellers. So the point I'm making is, somebody could look at this and go, well, I don't understand what's going on here because, well, it's respecting this fair value gap. Okay, well, if they don't know that this is a volume imbalance that needs to be filled, price needs to be paired, they're not going to recognize that as why this would occur here and why it's not going to take off or why it's not going to retrace. Same thing here. Volume imbalance. That's also fair value traded through. So now that's an inversion, but this would be an inversion with what? A volume imbalance on this side. So it literally did the same thing on both sides. But it had to pair price before it eventually said, okay, we've done all that we need to do, or we've done all that we can do there, and now we can move away, and then eventually we can come back. So not sure if that necessarily explains why, but it looks like about to tap out this 4-hour low. So it's wicked back through the that 830 sell side liquidity level again. If you hear the TV in the back, that is one of my favorite sci-fi shows of all time, Farscape. That's on. Okay, so now we get some closure through the 830 sell side. So one more thing for this price action. So at least on a 5-minute, and this again because it's fractal, it would apply anywhere. This Judas could actually be a legitimate Judas swing for price, meaning if we get a close through this 4-hour candle range, we may get a move back up. I think I don't know that I drew it out where you could see it here, but you may end up seeing something if it does close through. you may see something like this and then a continuation lower. So it's again, it's a possibility. It may not happen exactly like this, but um, we'll see. Now, one other thing that I'm going to talk about, and then I'm going to get out of here because it's we're at about like 40 minutes. So these are the points in time where somebody is going to get antsy and they'll get out, right? And you can. This is basically at a little over 50% of this move. So if you wanted to take a partial in here, you could, and then basically move your stop to break even if you know, are fearful of price coming back up and running you out of that position, stopping you out and continuing. You could do that, right? But there's also fair value that's here. But the bigger question, not so much about how price is going to respond to the most recent price action that's been delivered. The most pertinent question to ask yourself is, why would you get out? You can mitigate the position by taking a partial and moving yourself to break even, if indeed that's what you wanted to do. You could do that. However, this goes back into the confidence of whatever your trading plan is. If this is going to be the high of that 4 hour candle, this is the low of the 4 hour candle, you are literally about 90% of the way to your target. I'm not encouraging, and I'm not saying that if you can't psychologically hold till the purge of the opposing side liquidity, that you're in some form weak or whatever. I am not suggesting that at all. By all means, if you want to get out of the partial and just say, hey, look, that's it, and I'll just watch and see if it delivers the rest of the way, absolutely. If that's what you want to do, knock yourself out. All I'm saying is there's a reasonable expectation that you're going to see the low cleared. It's not a guarantee it's going to happen. It's a reasonable expectation that, based upon price coming back in to an area that it's already swept out the buy side, it's coming back in here for what? It's coming back in here for something. Now, granted, yeah, if somebody was looking at this saying, well, this is an order block, okay, I can go there with you, but this is also an open, okay? This is an open, and there are a couple of things, and I hope I'm not opening Pandora's box. I probably am, but you know, have a tendency to do that sometimes. So, from this opening price at 9:30, I know it's Sunday. It's crypto, so don't crucify me, okay? This is a 9:30 open. This is the low that's set, which just so happens to be, oh my goodness, the 7 a.m. 4 hour candle range low. So what is this now? This is now not just the 7 a.m. 4 hour candle range low. This is now also your opening range sell side liquidity. Okay? We did the same thing with the pre 8:30. We did that, but we do it a little differently when it comes to the candle that opens the day, theoretically, right? So this wick is gonna be your buy side liquidity opening range. Well, Jeremy, why is that the opening range? Why that wick? Again, we're going to consider the first hour of trading. That's your initial balance, right? That's the initial range. So this high is not run out by 10:30. This low not run out by 10:30, right? Okay. So again, still within the context and the confines of framing a trade. I know I said we were getting out of here, and then I sorry, open Pandora's box. I'm sorry. So this gets run out when? At 12:30. And it gets run out all the way to here. So I would mark this, if I was following Bitcoin, as uh, well, I'll mark it out for you and I'll show you how I tag them. And if you watch my videos, you know I have a habit of doing, like, I would do something like opening range, uh, manipulation, buy side liquidity. I would label it slightly differently, but for the most part, that's going to be it. Okay. And I'm not going to label this down here because we've already confirmed like this is going to be your sell side liquidity. Well, here's the funny thing. Fun fact for you. When the original or the initial balance gets run out, we're just waiting for it to turn around. That's how I trade. Now, that's probably not going to sound all high tech, fancy, trade language. That's what I do. I'm not chasing anything. I want you to show me. Like, show me everything that you can, like, whatever I can digest, whatever information you're going to give me, give it to me. And then I'll wait. I have no problem waiting. If it doesn't happen within the pretense of the 8:30, like if you're taking buy side to sell side and it doesn't align with that, then hey, look, I've got no problem. We've got no problems with one another. I'm gonna let you do what you're gonna do, right? So for me, looking at this, I would say, okay, well, it's definitely cleared the initial range, or excuse me, the initial balance buy side. So what's still intact? Well, my sell side still intact. My 4 hour candle range low also still intact. So if you notice what I'm doing, even though I've got the 8:30 buy side sell side, I have my candle range. Now we're going to opening price to say, okay, what's the probability? And I know you're probably again saying, Jeremy, why are you going through all of this? Because you're wanting to understand the context, one, and two, what you're now doing when I've just finished talking about taking a partial when you're inside this range. You're lining up the confluences as to whether or not price is going to potentially come back to your entry point and stop you out of break even. If you don't move to break even, is it going to come up and stop you out of the complete move? And you're trying to process how price has been delivering to understand what's the probability of that happening. Okay? That's why I'm explaining all of this, because all of this price in here matters. It all matters. When you draw out areas that might cause you some level of resistance of getting to your target, you can understand it's kind of like a speed bump in some cases. If this is fair value, what have we had here? This candle closed directly through it and then we've drawn away from it. So what's happening? What's it drawing into? Here's another area of fair value here. We can get rid of this. I mean, I think you get the idea with that, right? You got fair value here. Now, do you have to draw every fair value gap on your chart? You don't have to. Sometimes it helps. Again, I'm just providing what helped me to some degree just to try to understand. But also remember this, we're on a 5 minute time frame. And what did I tell you? On the 15, there's a volume imbalance here. There's one here. It's right here. So the question is, what's price doing? These are the types of things that you could look at and line up to kind of tell yourself, okay, well, this was my 8:30 narrative. 8:30 swept out sell side. I'm looking for buy side. Even when we get into the open, what am I looking for? I'm still looking for that buy side, right? Buy side taken. Great. What else happened before the buy side? Well, this was my initial balance. That was taken at the same time. Okay, bam. So maybe you're out of the 8:30 trade. Okay? Let's just stay with me for a second. We're gonna go through this real quick and then I'm gonna end the video. But just stay with me. Maybe you're in an 8:30 position. You've set that up. You've marked these levels out. You said, hey, 8:30 open. We're going into 9:30. So now we're into regular trade hours. Okay, and forget the fact that this is Bitcoin because it will apply on every asset. What are we waiting for? Price opened where? In the middle of a range. Even though you're in regular trade hours, just look at the range. What's happened? Nothing. 9:45, soup. 9:50, soup. Closed inside. Now, I know hindsight, a lot of hindsight people will kill me right now and they'll say, well, you're only going to say to put the stop below that because you can see it. Doesn't matter where you put it. That's up to you. All I'm going to say is it's closed inside once, twice, hell, even here 3 times. It doesn't matter. This candle's not jumping all the way up here. Whatever. If you want to jump in, you want to take a market or do whatever it is that you want to do. Or you could put a stop order in and say, hey, listen, this candle closed. I'm just going to put my buy order at this wick high, and wherever you put your stop is where you put your stop. Now you're in, right? And now you're waiting. But now what else are you waiting for? You don't have to do the 830. Maybe you don't trust that model. It's possible you don't trust that. So then what can you do? You wait. You wait and do nothing. Now somebody would look at this and say, why the hell would I miss all of this? Well, do you know where that's going? I mean, do you really know where that's going? Now, I'm not a fib expert, but I'm pretty sure that there is a fib expert that could probably come in here. And let me see something here real quick. I don't think that this is gonna work, but we're gonna try it. Okay. So this will be my best guess. So this is a 3 standard deviation, which price does reach there. So I guess it is. And I'm gonna tell you what I measure. And again, I'm gonna say I'm not a fib expert. Okay? I'm not. All I did was I took the manipulation below this low here and I took it to this high. Why did I do that? Because this was a manipulation. I'm treating this candle, right? This first candle that created the manipulation as my high. It just so happens that the very next candle here, this extreme doji candle, just made equal lows. So this one worked out, but this would be the high. I'd be waiting for this to get broken for what some people describe as a change in the state of delivery, but I'm waiting for the structure to be broken. So that this bullish candle would be a structure break for me. And I'm just taking the high of that. I'm going to take the wick high of that. I don't have to take the wick high. I can actually take the body. So there's some people that will go body to body. I like to go wick to wick if I have to, which is why I said I'm not a fib expert. However, if someone were looking at this and said, how do you know where it's going when I say do nothing, sit and wait? Somebody's going to look and go, well, if you know it's going there, how do you not, like, can you predict? You put a standard deviation on it. Does it have to go? No. Can it? Absolutely. Is it likely in some cases? But again, I'm not the standard deviation guy. I'm not the fib expert. I have it's again, it's learned. It's things that you just incorporate when you have a fundamental basis of understanding what it is that you're looking for, or what you're doing, right? Because the reason that I even bring that up and I said it is because somebody will say, well, I missed out on all that price. Well, maybe you're not supposed to get in on that price. Every move isn't supposed to be had. That's a fact. That's an absolute fact. You're not supposed to get everything. You're just not. Contrary to what everybody, and I do mean everybody, thinks, you're not supposed to be a part of every move. So we go back after doing that. Um, and if someone was again to say, well, okay, you don't get in the 830, but you're waiting because now it's the open and it could be volatile and whatever, right? So you're like, okay, well, what position can I get into in here? None. You can't. Why? Initial balance high is your 930 wick high, and that's your low. So what is that now? What does that become? That's your buy side. That's your sell side. Well, you can frame if you want, and that's why I use the pretense and the precursor of the 830, because by the time you get to 950 and you realize, well, shit, the 950 swept out the 830 sell side, and this candle here closed inside. I understand we're in regular trade hours now. I understand that we're in a regular session. What's probable? Again, we're just talking about probability. What's probable? Is it probable that we run up here? Let's see how price develops. This chop would have forced enough people to say, fucking I'm out. And for good reason. I mean, do you really want to sit in chop from 10 o'clock to 12:35? Probably not. There's a lot of emotional stress. Somebody's, getting pulled through a keyhole backwards looking at this, second guessing whether or not they should have stayed out, should have gotten in, you know? But when you have some type of confluence and context under where price could be drawing to, you might say, hey, look, I'll sit it out. Put your stop at a reasonable place and say, well, I'm not expecting or anticipating it to come run this because it should be reaching. It should be reaching for something. It shouldn't be trying to come back for something. It should be reaching for something. In terms of 930 price, right? The initial balance gets run out at 1230. Okay. Okay. Has it reached this yet? No. So again, context. If this is a news driving day, if there's high impact news, am I in this? No, I'm not. Why? Because something like what we just had this week, a presidential election, FOMC, even if it's not anything about a rate cut, even if it could be just one of the Fed speakers stepping up to a podium and saying something, I don't know what you're going to say. And if you're speaking, that means that it's a manual intervention. That's just, again, that's my thought process, and that's how I believe about that kind of stuff, which is why I don't trade during those situations and those times. I don't. I will tape read. I'll go into a paper trade. I'll paper trade something to say, hey, look, I think this is what's going to happen, and if it plays out, great, that's a paper trade. If it fails, I go, hey, great, that was a paper trade. Like, you're not taking my capital on that. You're not taking my capital on a whim. And granted, I'm not going to incur or assume via a win capital that was artificially manipulated because it just happened to work out in my favor. That doesn't mean that that's something that I should get in the habit of doing. I look at it and just simply say that was a favorable outcome for something that might have been just like really stupid to do. That's, again, I'm not looking down on anybody that's able to manage those positions and be able to pull those types of things off with whatever degree of accuracy that they are. More power to them. And I mean, I could respect that and I could appreciate it because, you could teach something on that or not. You could hold it to, you keep it to yourself, or you could say, hey, look, these are the things that, the signs and price or the signatures and price that you could look for when these type of events are coming up. This could be the ultimate move. Now, from a technical standpoint, I could always look at something and say, technically, this is where it should go, but there's a high impact news event tomorrow. So what's going to occur before it goes there? If in fact, this is the news driver that gets it there. You understand? So that level of probability and expectancy, if you will, is not something that I'm willing to err on the side of. I'd much rather just stay out of that and let whatever's going to happen, and then come back and then reevaluate after that, right? So just getting back to this really quick, I'm sorry. I feel like in these moments, like a lot of times I feel like I want to be able to get out and share like what the thought process is behind, and it doesn't seem like it's just so random, like I'm just willy-nilly, like I just know. I don't. I'm starting to say this often too. I'm doing these types of videos now because I feel like there's gonna be at least one other person in the world out there that was like me, that just kind of wished somebody would just talk to them about what ideas or how, and the rhyme and the reason as to why, right? This is probably just for that one person. Everybody else is going to be like, I gotta know what the fuck he's talking about. He's fucking confused. He's drawing all these goddamn circles and rays and shit. I don't know what the fuck that is. That's fine. It's not for you. So I appreciate it and thank you. So again, if you're looking at this initial balance and you say, okay, well, the initial balance was taken here at this 930 high, you might be going, oh, well, wait a minute. Is it going to reverse from here? Is it going to go short because it didn't go back into basically that opening range gap? So because it cleared this out, is it now going to target the sell side? Well, again, framework. What's a framework? You're operating inside of range. Have both sides of the range been purged? No. Again, what would be the expectancy and the likelihood? You could continue if you got in back here, if you used Fib Magic or whatever. I'm not teasing. I just Fib Magic came in and I just said it. I don't discourage fibs. I like fibs. The fib people are gonna come for me. You called our stuff Fib Magic. It's a good name, but got magic keys. Fib Magic. I should coin that. I need to trademark that quick. So yeah, you get the clear, right? And then you get your 830 buy side cleared out. So let's say this is a candle, you're out of the trade, you're done, right? What now do you have as the possibility of a framing of a potential future trade? What do you have? You still have this high, and it's a very, and I will say, it's a very small range, but this is what you have. And I can't put another one down here, but you get the idea. You have this range, right, to this. So what might you be looking for? You could just say, hey, if price, and this is where I've suggested, and this might help some people compartmentalize price and price zones or ranges, whatever you want to call them, okay? Compartmentalize price. And what you're looking to see is, okay, we already knew this was up here, so it's probably going to run. We just don't know where. And I told you earlier, I'm not going to sit here and tell you, hey, yeah, I know. I've already told you. I'm going to wait for it to turn around. Show me that that's what you're doing. And I'm going to frame price. I'm not even going to wait for you to tell me or to show me. Because when it turns around, what are you're giving it to me. When I say, just give me everything. I want you to show me what's going on, right? So when price gets all the way up here, it shows me, hey, I'm turning around. So what's this now? That's another buy side level that I'm going to be very confident that we're going to run back into at some point in the future. But I'm going to annotate it, right? And I'm going to designate it as such. That was the opening range, manipulation, buy side liquidity. I don't care what time that is. And when I say I don't care, what I'm saying is whenever I get a high that's taken and then a reversal from that point, that's going to be, I don't want to necessarily say a key level, but that's going to be a significant point for me to be able to look at and say, okay, this is potentially a target in the future, right? So here's a reversal. Here's the closure. Back inside. And obviously we could see what happens over here. We do have this volume imbalance. We get this clear to kind of pair price, and then it closes back inside. So if you're a buyer from here, or excuse me, a seller from here, stop above here, what are you targeting? This low. Well, we're clearing that and just cleared it right now. So the point in showing and saying all of these things, some of this in half-sided hindsight because it's just completed right now, and this is live on a Sunday, so this is not a market replay. I'm not saying let's see what will happen now. Like you just watched it, right? Here's all I'm saying. If you're looking for um, signatures, or you're looking for an idea as to what price is doing, what it's reaching for, what it's looking for, just start to allow your mind to think about time frames. Well, let me back up. Allow yourself to think about sessions and session times. Allow yourself to look at maybe pre-market high and lows. Then look at specific session high and lows, and just go back and test those ranges. See if, price moves outside. It takes a sell or sell side, or it takes a buy side liquidity uh, portion. Mark the range off and say, okay, the buy side's been taken, the sell side's still intact. Where is it running to, and when does it turn around? What else did it clear? What other liquidity point? What other inefficiency did it take? Right? Where else did it go? And did it turn around? Okay, where did it turn around? Mark that out. Mark that high or that low out, and wait until it trades back into your original range. Now, if you don't do anything other than that and just test that out, just see how many times, it actually plays out. And then also, while you're looking at that, journal that, and then also journal the number of times that it doesn't. And specifically, when it doesn't, include details as to why. Was there a fair value gap? Was there a fair value gap that inversed, that basically reversed price direction? Did it reverse because of a volume imbalance? Did it not complete because of a price void? Did it gap down and trade back up and through? Like, whatever. I'm just giving you examples, but it's like whatever occurred for it to not complete, be thorough in your documentation of what that was. And then you just continue to watch. And over time, you'll have an idea. It doesn't mean that you're going to know exactly, but you'll be able to kind of give yourself, and I said this before, right? I've got a notebook where I'll write stuff out, or I'll go into a Discord channel, and I'll electronically document, and I'll bang out on my keyboard. This is what happened at this level. This was the price. Price gapped and ran. Economic news was weak for whatever, may have caused short. Looking for a buy side to be run out. Whatever. Screenshot and a narrative as to why. Because what that does is it'll give you at least a reference, or a guide, or a mini checklist, if you will, if when you're looking at price in the future and price seems to be showing those same signatures, go look at your notes, look at the guideline, and say, okay, so I've noticed that this has happened before. What's happened before? It's these 5 things. And you can literally just go down the list and say, okay, not down the list to see and say one of these is going to happen. I think it's going to be this. You're not doing that. You're, again, let price show you. And when it does certain things, like maybe give you a volume imbalance on a higher time frame, or you put up, or excuse me, a volume imbalance on a higher time frame, and you see something like this, you could paper trade and say, hey, you know what? Maybe if it comes above and it grabs this very short-term buy-side liquidity and trades back above and pairs price there, maybe when that candle closes, let me go on a paper trade and take a short to whatever the lower threshold of sell-side liquidity is. Whatever it is, let me just see. But you have to be able to give yourself the permission to be patient enough to just sit and watch. Let it show you. Let it tell you what it wants to do. Right? Kind of like I just gave you a little bit of a narrative, and that wasn't me, supposing. That's the fact that I've looked at and watched price enough just by itself to say, I told you what, if it closes through this level, it closes all the way through, it does some foolishness like this, I would be expecting lower price. Now, does that mean that my little random path drawing is going to be correct? No, it doesn't. That again, that's my expectation. But look at what it's doing at this level now. The wicks are doing the damage, but the body right now telling the story. This body is saying, "Hey, let me just peek my head out and see what's going on." If it closes through that level significantly, not I'm not just talking about just a simple body or a simple candle closure. If it's a significant body closure and there's any kind of displacement below, it's possible. You're going to need quite a bit of displacement below that to kind of sell me on it. I still believe that there's some level of shorts that might be in, but week after the election, I'm not 100% sold yet. So there's probably going to be some play back and forth in there, but we'll see. Right? So we'll see.